How's it going, everybody? Welcome to Chart Request Live. I'm your host, Steve Straza, joined by my esteemed co-host and pal, Patrick Dunawilla of the Chart Report. We're here every Thursday. It's our favorite show.
It sure is.
Get to make our own rules. So today we're getting some movement. We're getting some action. Looks like into the end of the week here. What's the takeaway? I mean, we had a big Fed meeting yesterday. A little bit of a hawkish, development there. Market's reacting and looks just like a broad-based sell-off to me.
Yeah, what's amazing about yesterday is it kind of played out just like you'd expect a normal Fed day too. Bespoke had a great chart yesterday, just showing what the average Fed day looks like, and yesterday tracked it like to a T. And here we are gapping lower. We're getting follow through. So, what do you think of the action out there? Today is one of those days where I'm just kind of tuning it out and just waiting for the close. Uh, you know, the positions I got on, we got our risk levels there. So what do you think of all this?
I mean, let's talk about it real quick, right? Stocks are getting hit pretty much across the board. For me, in periods of corrective action, right, or downturns, I want to look at the weakest indexes and the weakest stocks because they'll lead to the downside and give off some really good information about what the broader market might do. So from an index perspective, the laggards are small caps, right? So here's IWM. A lot of people have been looking at this, like talking about some sort of a head and shoulders pattern shaping up here, right, Pat?
Yeah, yeah.
So look,
Well, you don't think it's a valid one, or
yeah, no, I mean, listen, it's a tiny one, but sure, okay, fine. So if that's the case, we've now retraced 62% of the advance off of the March lows, right? So the year to date rally, really. We're going to go back to those lows from March if this is a valid downside resolution, right? So this head and
right?
shoulders or little top is completing. So does that mean like back to the lower bounds for small caps?
I mean, we've tested those lower bounds, and that those lower bounds are really, really important level going back years.
Yep.
And every single time it's successfully tested it, but you gotta ask how long is that gonna last, right? How many times can we test that level and find support there, right?
Yep. So if we do, right, then we're talking about another, well, to the year to date lows, 6% of downside. And if we retest the lows from last year, 8.5%, right? So we'll see. But the laggards right now, groups like small caps, are breaking down, are making new multi-month lows, and indicating that they might be revisiting those lows from either earlier this year, late last year.
Yeah. What about something like the S&P? Do you have a support level on there? I know, John Roque yesterday with the 4,200 level, but also 4,300. Those were the August highs from last year.
This is the way I'm viewing the S&P, really, right? We are just stuck in this range right here for now. So you call it 4,300 to about 4,600.
Yeah, you're looking at those August highs, and what was that? The August, well, so the August highs of 2022 and the August lows of this year.
Yes, and then
Yeah,
also the July highs from this year would go
right,
with.
right.
Yeah. Yeah, I mean, listen, really rangy here for the large cap major averages still. I guess you could call these little short-term top. Listen, if you wanted to get super tactical, so here's the NASDAQ, right? Just do something like this, and then we'll move right on because we're not going to get to all the chart requests. But you could
Yeah,
draw
well, we got a ton of tickers to get to, but I think this is important, so let's keep going.
this.
So,
You could draw a trend line. You do get a break, which is always the first characteristic of any sort of reversal, right? So you got the trend line break. Now maybe you get some sort of a tactical top completing, but that still has to go, right, at the pivot lows here. So we'll see. Something like IWM, it's already gone, which is why we're looking at it for leading information. Does the NASDAQ now follow, complete a similar top, and then where would that send something like the NASDAQ? I would just fib it out, right? I mean, look.
yeah, you could use fibs, but also, what I would do with these patterns is do a measured move, right? And those would coincide with a lot of those levels you drew, the August highs, things like that. So I think as ominous as those patterns might look, we're talking single digits of downside. I'm not saying that's not uncomfortable, but it's I think the uptrend could still be intact off the October lows. I'm not talking about the trend line, but the series of higher highs and higher lows could remain intact, even if we did dip 6, 7, 8%, right?
Never want to overthink a trend line break, but when you're trying to anticipate, right, a move, you'll get that trend line break. That'll be one of the first signs, right, of further downside. So we're there in the major
Yeah.
averages. And you're right. We'll see. Can we still carve out a higher low and keep this thing going? Absolutely. And we'll draw a new trend line in a few months. So
Right. All right. Yeah. Let's get to some of these tickers. So we got a bunch in the emails. Let's start with Etsy. Yeah.
yeah, cool.
That's one I haven't looked at in forever.
This one was in the news. Something happened, or we were talking about today on the morning show. I already forget why. Yeah. Wow. Yuck. Huh?
Yeah.
How?
Look at that, breaking last year's lows. Oof.
All right. Well. Okay. Speaking of trend lines, right? So from a structural perspective, right?
Okay. My eyes didn't even see that, but I see what you're looking at now. Yeah.
Multiple touches, change in character, seeing something like that break. Let's zoom in now, right? We do have the shape of a massive distribution here, right? And this level that just went was a big one.
I was going to say that's the level my eyes went to. And you could even draw it back further to the left there. I mean,
Right.
if you see, I mean, it had a tough time trying to clear that, and it ultimately couldn't.
Sure. You're absolutely right. So resistance, now turn support, now not working as support. But look out for something like this. If the market were to turn around, recover, find a tradable low tomorrow, this is the kind of name that could rip in your face. You don't really have a momentum divergence shape. Yeah, so listen, I wouldn't overthink a momentum divergence like this, but if I flip it to a weekly, you'll see it more clearly, right? So on the weekly, didn't quite get oversold. Be careful, you don't want this to hook higher, right? So you can't be short below these pivot lows, but if this thing just keeps dragging lower, hangs out here, maybe coils a little bit below this breakdown level, call it 68. We're below 68, path of least resistance is surely going to continue lower in this one. And I think a natural next support level would be those COVID lows. So you're looking at this thing getting cut in half eventually.
Wow. It looks like it already has been cut in half a few times from that peak. I mean, this thing, what did that peak at? 300 or something?
Cut in
wow.
Half times. Yeah. So from 300 down to 60, can we see 30? We'll see, but the trend is lower and trends persist. That's a massive top. This is not a name I think you want to be long.
Yeah. All right. So let's move on to Starbucks. You ever go to Starbucks? You guys got those great Cuban coffee shops down there. Get your cortadito.
I'm not a Starbucks guy, but I'm also kind of over the Cuban coffee. I got to be honest. It's too hardcore. Look, here's Starbucks. I'm going to zoom way in. This is a weekly. I just see a top here. See a real clear top. Let's look at the daily. Right, so Starbucks, like most stocks, really fired off the lows from last year, bottomed before most stocks, bombed in May of 2022. Ran back, couldn't get back to those old all-time highs from 21, right? And you got, textbook looking top here. So let's draw that out. Ugly old arcs. There you go. So if we're below these pivot lows, these year-to-date, what were the year-to-date lows, call it 96, going lower. Listen, this one's still quite actionable. If you want to trade something like this, let's fib it out and see if there's any natural.
Let's fib it out. That's my new favorite catchphrase of yours.
I mean, it works, right? You like it?
Wow, look at that. Look how it lines up.
So there you go. Once you retrace 38, it's likely that you retrace 62. And like we talked about with the Russell 2000, at the top of the call, once you retrace 62, you're likely looking at a full 100. That's how we use these. It's not more complicated than that. So Starbucks has already done the 38, a 62% retracement from here, which would still be pretty standard correction. And we could, keep the more structural uptrend intact off of a 62% retracement, but you could still trade it listen, not really for me. You're trading it from like 94 to 86 and you pick up like 8 points here. I don't know. There's more interesting things, but those are your levels and they are clean.
Yeah. Well, let's get to some in the chat here. Thank you guys for listening, and we don't want to ignore you, although we have a ton in the email. And if you ever want to email us, we usually try to give precedence or priority, I'm sorry, to the people who email us. And the email is questions@stockmarketmedia.com. But shout out to Rachel. She says JC bought an infant jersey on Etsy for his niece.
That was it.
Uh, that was it.
I knew I heard Etsy at some point today. I got so much news on podcasts going and Twitter Spaces.
It's a busy day, lot going on, So
yeah,
we'll give you a pass on this. So, what about REMX?
Rare earth metals.
Rare earth metals, yeah.
I don't know, man.
Struggling with the rest of them.
It's weird, right? Because commodities are starting to show signs of life. Maybe not the industrial metals and the commodities that matter to these rare earth stocks. But even if you look at something like, I'm sorry, we are talking about REMX, but if you look at just the materials sector, I mean, not good, right? Commodities are doing well. And look at materials. I don't know. And here's SME, which this is, same kind of conversation. Rare earth is just, a more niche group of these metals and mining stocks. Really, we're talking about stuff like lithium, vanadium, other things that I can't really pronounce. But look, bottom line is this is also just a distribution pattern, like the others that we've already talked about here today, right? So something like this. There's your top. Drawing a little neckline here. You'll draw through some false starts and shakeouts almost every time you do this. Right. But, here you go. You got the COVID lows, the COVID bottom here really ran up nicely. 5-6x from the 20s to about 120. Right. So this was a, great performing index off the COVID lows. But now for almost 3 years sideways since, early 2021, this is distribution.
Yeah.
Got the 200-day moving average is flattened a long time ago and has been sloping lower since, this time last year, earlier, right? And now we're breaking key support at the pivot lows. This, to me, is the breakdown level of a pretty giant top. Things don't look good for rare earth metal. So you could play it against this, these pivot lows here, say 73. And then even, look at this, Pat, more tactically, when you zoom in, right, you got the breakdown.
That's just a waterfall.
And then you got the little coil, right below the breakdown level, the short, tight consolidation, right below support. And then look at this, follow through, right? So this thing's going. Let's look for a level to the downside. You're saying we could measure. I agree. Maybe because I'm lazy, I want to look at the fibs first. Yeah, fibs aren't really giving me much here. We're headed for that 62% already. Not good in terms of how far this move goes, right? Once we do 62, we want to start looking down at these lows from COVID. So then we're talking about another.
Yeah, or maybe even the pre-COVID highs too. I think you could probably find some support there. No?
Logical level. Great point. Thanks, Pat. So let's 66 to 44. So 22 points of downside. If we were to measure this top, what would it give us? So if we measure out the top, say 72 to 126. So we're looking at 26. What is that? 48, 56 points. So that would be even bigger, right? That wouldn't measure out too well. That would put you back towards the lows. So yeah, I like what you're talking about. These, former highs here, right before COVID, right after COVID, $44. Doesn't look good.
Yeah, I mean, that's considerable downside from where we're at now. But let's take a look at.
Yeah,
sorry, you're looking at uranium?
No, I was.
Yeah, let's take a look at that.
Yeah, see, this is what's dragging on rare earth metals. See lithium?
Is that a big component in REMX?
Very similar. Very similar. See, if we were to overlay lithium and rare earth, let's see just how similar they are. So this is ticker symbol LIT. This is the lithium.
Oh my gosh.
Yeah, so there
you go. Look at that.
So rare earth, maybe check out the components because you might just be buying a basket of lithium stocks. I don't.
Isn't it amazing how these ETF companies just come up with different ways to package a group of stocks?
They
All
are
right.
geniuses.
So this one was a former leader. This one comes from H Chan. Thanks for throwing this one out there. Celsius, PELH,
So these
had
guys,
quite the fall from grace the uh, last few sessions.
yeah, we were long this one because this was a heavily shorted name that we wrote about in the short squeeze late last year. Already hit our target and then some. You know, these guys sell poison water. I know you guys drink it over there in San
I mean,
Diego.
hey, it's a lot better than something like a Monster or
Is
Red
it?
Bull or any of
I
those.
don't know.
Yeah, I mean, it does have sugar and some of those other
I'm not a
weird
scientist.
things like, yeah, I'm not, yeah, who knows?
It's chock full of crap. But so this is Celsius. All seriousness, it's energy drink company. Been in a killer uptrend since it's been public. There are your levels, right? So back towards that shelf of highs from earlier this summer. Call it, 155. Like you said, Pat, almost a change in character in the nature of down days, right? So this is the 1 day rate of change we're looking at here in the upper pane. And, we're zoomed all the way out here. You would have to go back to January of this year for a worse day than yesterday for the stock, right? So, that's how I like to kind of analyze rate of change. Look at something like this, say, okay, there have been two particularly bad days now back to back. When's the last time we had a string of days this bad? You'd have to go back to June of 2022. So totally a changing character, the nature of the way that this stock corrects.
Yeah, kind of like a downside momentum for us. You know what I keep looking at is those unfilled gaps you got there. You got two big, giant, unfilled upside gaps there.
So this is what Pat's talking about. One there. And what am I doing? Boom,
Oh, it's that tricky magnet tool.
boom. All right. So do those get filled? We'll see. The first gap lines right up with that 161.8 around 154. So that's probably where we're headed from here.
Yeah, and that second one is at former highs there. Both would make sense to fill. They're both at pretty key areas. Um, well, anyway, let's move on to LRCX. Let's look at a semi. You know,
I like Lamb Research. So this is a semi equipment name.
did it ever get the all-time high or?
Got close. It looks a lot.
Oh, so close.
It looks like semis. It looks like tech. This is a leadership stock, though. You gotta be careful with semis right now, right? There's a double top printing at the index level that looks really similar to this LRCX right here. Um,
Well, if we're talking SMH, that's a failed breakout. That one actually broke out. But if you're looking at stocks, that one actually never broke out. So I think, in hindsight, that maybe was a tell. What do you think about
I mean, you're the one who's always doubting breakouts. That's really a breakout.
that?
I don't know. I mean, maybe that's a breakout to you. Never got a decisive breakout, that's for sure, right?
Right.
Just like we saw here at the 21 highs, right? It was this little short-term top and ended up seeing massive follow-through to the downside. Well, this is the same exact thing. A little short-term top. So the question becomes, how does this follow down, right?
Right. How far does it correct?
Right. And then what you'd want to do, and we'll flip back to LRCX and do the same. Fib it out. There you go. So for something like SMH, there you got the 38% coming in, or 10 points lower from here. We'll do the same thing on Lamb Research. Again, look at just how similar these two charts look. You did have a nasty little momentum divergence here going into these highs. Didn't get overbought just at the highs from earlier this month. So if we drew a little top here, right, make it look like SMH, this is what I'm talking about. And if we fib it out, I don't like that.
While we're on semis, I think we got to take a look at NVIDIA. We have Wavy. Shout out to Wavy in there. He asked to see NVIDIA, but that's one that I think is on a lot of people's mind right now.
LRCX, let it keep falling, right? I wouldn't step in here. I think you get support around 560, 540, 560 zone. And as you're watching stocks like these, right? Lamb Research is seeing, okay, how nasty of a correction is this? We just talked about something like Celsius, how the nature of the corrective action is kind of, picking up steam. Watch the RSI 14, right? You don't want to see oversold readings on these corrections. You don't want to see oversold readings, and some of them are getting awfully close. Nvidia looking toppy, just like it's
awfully close.
So again, look at this momentum reading. We're 3 points away from an oversold reading. That would be the first time since the stock bottomed last fall. Don't want to see that. So here we go. You could draw Nvidia something like this. I don't think you want to get too fancy with the diagonal lines. You want to really pay attention to this gap zone here, right?
Oh yeah, and that's the gap all the way from May, right? That first, that kind of really ignited that whole AI boom.
Yeah. So this was 2 quarters ago, not the last report.
You could argue that's one of the most important gaps out there.
It's a huge gap. It was a gap to new all-time highs. That was a textbook breakaway gap. Looks a lot like 10-year yield looks today. So watch this one. If this trend line goes or these pivot lows goes, you're going to get that gap fill, or at least a test, right, of the upper bounds of the gap. Do we go all the way back and fill it? Listen, if Nvidia went back to fill that gap and retest those former highs, a lot of people out there will be licking their chops.
I was gonna say, I mean, let's like pause for a second and just think about where this is. I mean, we're talking about just a normal retest after a breakout. It's gonna feel really uncomfortable, especially for anyone who chased the stock. And a lot of people are going to doubt it, but you said it best. People will be licking their chops. Disciplined investors, people with cash, who have sat out that massive rally and didn't chase. They'll be the ones with their hands out, right?
I don't love this. Drop the VWAP from that day. So anybody who bought the stock after the historic earnings report 2 quarters ago, just kind of taking out that VWAP here this week. Right. So maybe some people.
Yeah, that's a good point.
And it leads, some investors who just showed up, right, late in May following the big gap up. Maybe they throw in the towel, capitulate. You get a little bit of further downside. You get a gap fill. And I would think there's just going to be a silly bid for this name if you get any sort of like technical retest.
So we have
Patrick. There are alerts set on computers all over Wall Street for Nvidia to retest its old highs. You agree?
Oh, I would completely agree with that. Yeah. And yeah, licking their chops. But Empirical Notes wants to see the Nifty 50.
Really? Okay.
Yeah, let's get out of the US for once.
In dollar or rupee?
Let's do both. All right, so you got INDA.
INDY. Yeah, this is the Nifty 50. This is the Nifty 50 in US dollar terms. Okay. So nice base. India looks better than a lot of emerging market countries right now. Right. So we do have this little base here. So you want to see that, a clean resolution from this reversal pattern. I think you get that around 46. If you want to be careful, you can use like 46.50 pivot highs from just, last week. And then if we fib this out, there is a little momentum divergence. Should we overthink that, Pat?
No, I don't think you're overthinking it at all. I saw that there, and and right at a key level too.
Right. So you got that little Momo divergence. Price is making a higher high.
And it didn't even get overbought on that second peak.
So you could do something like this, right? On this failure, just look at the year-to-date advance. Say, okay, 38% gets you back to about 44. We'll see. But this one needs more time. Let's look at Nifty and local now.
I like how you have the fibs, the different levels, a different color. I might start doing that on mine.
Yeah.
It's a good way to kind of differentiate.
Nifty 50, just incredibly strong in local. What else is new though, right? Yeah, this is great. So you already got the breakout this year, right? 2022 was really just a giant consolidation. And then in, May, June of this year, we finally got the breakout. So if we just fib that.
Yeah, fib it out.
2022 drawdown. There you go. We haven't even hit our first target yet. We're kind of in no man's land here. Whenever you're in no man's land, just use pivots, right? So in this case, what do I mean? You have your pivot highs and lows right here. All right. So there are your levels. Kind of range bound, but beautiful uptrend on local. In USD terms, needs more time for that base to finish building and break higher.
How about ISRG? This is one we were trading a few months ago. We got stopped out not too long ago, but
They're dentist robots, right? This is the dentist robots.
I believe they're actually heart robots. I think it's the Da Vinci surgery or yeah.
So cool, huh? I don't know what any
Oh,
of
it's
these.
amazing stuff.
Hey, Sunnyvale, California. You know that?
You know what? I actually don't know where that is.
Huh.
Probably should.
All right. Uh,
But yeah, robotic surgery might be heart. Not sure it's dental, but what do you see?
I don't know. I just made that up. I feel right.
Is that a 200-day moving average? What do you got there?
Yeah. You know what I've been thinking lately? I don't like the simple anymore. I used to use exponential. I switched to simple, and I really think I want to go back. Any
Yeah.
got
Wait,
anything?
so you switched to exponential and now you want to go back to simple?
Started with exponential 15 years ago, 10 years ago. I didn't know what I was doing. Switched to simple when I studied for the CMT, right? Know a lot of people that use the simple that I respect. But now I'm kind of like, I don't know. I'm an antsy guy. I don't want to wait. I don't want to wait. Right. The exponential is faster. And I'll look at people's like charts on Twitter and they'll be using exponential. I'll be using simple. I'll be like, this thing already turned. You know what I
I
mean?
think I think it's useful on like longer term, the exponential moving average, like if you're looking at a 40 week or something like that, I think it's useful then. But other than that, I can't really figure out a good argument for waiting the more recent data,
The simple works, I guess, for me because what we're really doing, at least our analyst team, us all-star chart report people, like we're using it for trend identification, right? We're looking at the
right. You're not looking at it for support or resistance.
and the exponential will give you false signals where it'll turn and turn and turn and turn when it's sideways. The simple is just it's so slow when it's sideways. It's typically just flat until it makes a move. You know what I mean?
Right. Right. And at that point, you don't even need a moving average. At that point, it's pretty obvious what direction the trend is.
All right. So speaking of short-term tops, Pat, I mean that's what this is here in ISRG, right? So it's kind of like we overshot it. You got the false start to this top here in August. Hooked higher. It was like, okay, we're going. Nope, failed miserably. So you're pretty much confirmation today. If we close below those lows from August, next stop here, 252. I would even say, yeah, maybe lower. It gets messy, right? I don't have clean levels
Right.
here. I would be first looking for this gap fill, right? So maybe you'll see something there. These when you're trading these ranges, right? These big ranges, it's tough. I want something that's trending. I don't think this is a great trading opportunity here.
Yeah, and Steve, almost every single chart we've looked at has formed a little head and shoulders,
Yeah.
or kind of, if you don't want to call it that, that's fine, but something distributive, right? Something kind of toppy. It doesn't have to be a huge one, but there's almost every chart, like I said, has that 3, 4, 5 month distribution pattern forming.
Here's my problem with trading these short-term tops, right? I love all year, I've been trading short-term continuation patterns, but I'm trading in the direction of the underlying trend, right? Buying breakouts of consolidations in the direction of the underlying trend. Now that trend is reversing. Most stocks have been rising since last summer, last fall, right? So you have an uptrend in place. And now, if you want to get short here on the completion of these reversal patterns, that's just a tougher trade to make because you're banking on a trend reversing rather than persisting. That's
I'm
my
sorry, I was reading someone in the chat. They said Sunnyvale isn't that where Buffy the Vampire Slayer is from? That's very possible.
You ever watch Trailer Park Boys?
They're up in Canada, right?
Yeah, but isn't it called like Sunnyvale Trailer Park? I don't know. Whatever.
It might be. Yeah, I think you might be right. So we got to wrap it up soon. I want to get to PJ. PJ asked for CEG,
Is it the utility? Oh, looks like energy.
Constellation Energy.
No, it's a utility. So it must be gas then. It's probably regulated gas. I'm not sure. Independent
Got to
power.
check that RSI though. I'll bet you there's a bearish momentum divergence. So I'm not cheating. I'm not looking.
This is clean energy, but everybody tries to put clean energy into their description. I'll tell you one thing. It doesn't look like most utilities.
No, it does not.
It's a lot more like an energy stock to me. How's the yield?
And you know what,
That's
Steve?
not
You know what?
yield 1% either. I don't know.
You know what was an early tell of some potential weakness coming this week was you look at XLU on a relative basis, utilities versus the S&P.
You got the scoop.
You got the scoop and score. You got a little false breakdown,
Yep.
and if you line that up with the S&P and look at every time utilities have been outperforming or going up on a relative basis,
Yep.
that usually coincides with a down market. So that was something I saw. We covered it in the top 10 report where this Sunday, and you're seeing that weakness kind of play out. So,
And I was saying to JC, we were talking about this in the morning show. It was like utilities were underperforming. Defensive sectors were underperforming the last.
oh, they hit an all-time low on a relative basis 2 weeks ago, 3 weeks ago.
As the broader market was in the middle of a big correction. Now all of a sudden,
Right.
Those defensive groups are going to start outperforming, and you're going to tell me the correction's ending? No, it's going to get worse.
Right. That's a great point.
So here we
But
go.
anyway, back to this one because this is an interesting one.
See,
thank you, PJ, for sharing this one.
Yeah, pretty chart. Clear level, clean breakout, almost first target hit, not quite. Give this one time. You don't want to be, too tight with your risk management on a stock that's, trending this well. Like what I mean by
if it got that close to your price target and you didn't start to take things once it kind of rolled over a little, I think that's kind of on you, right?
let it go. You can enter on strength above the 161.8, right? Or use the pivot highs right here at 112.50, 113-ish 50. Or if you want to look to like get into this one, the point to get in was when the breakout happened back in August, right here, right around 97. But you could use these little pivot lows here, right, as an entry. 104 just broke out from a nice base. Seems to be following through nicely. I'd be patient with a name like this. Looks good. Can I do mine now?
Yeah, absolutely.
Dude, what if I told you?
TNX. Oh,
What if I told you this was a breakaway gap in yields?
absolutely.
Yeah.
And now the breakaway gap, just for people at home, that is when it gaps over resistance, right?
Yeah. It's a breakout level. The gap occurs at a key level of interest, at a level of price memory. Right. So here you have.
I always got all of them confused. There's a lot of them. There's a runaway gap. There's breakaway. There's plenty of them.
Patrick and I, this is funny for us because Patrick and I used to study for the CMT. We would stay up on the phone together until like midnight, 1 o'clock in the morning, like going through practice questions, racking our brains about all this stuff.
Yep.
Those are the good old days.
Those were the good old days. That was fun.
That was really fun. So look, it's about to get overbought. I want to see that as confirmation. You go across the board. This is the 30-year, right? Taking out those highs from 2022. I'm running like a true rate of change study on my Optima. This is the biggest move for the 30-year since like June of last year. So you're getting that momentum thrust with the breakaway gap, confirming the move. I think this is as decisive of a resolution as you could have asked for if you're a bond market bear, right? If you're somebody that wanted to see higher yields. This is just perfect. This is really quite textbook here. Here it is on the 10-year, right? Going. Here it is on the 5-year. FVX, just to be completely exhaustive.
I think, correct me if I'm wrong, but I'm pretty sure I saw a stat that almost every duration on the curve hit some sort of multi-year or cycle high this week.
It seems that way.
I'm pretty sure, right? I mean, we could look at the 1 year, right?
Yep. So the 2-year already did it. The 1 year, yeah, it looks like yesterday. I mean, this thing barely moves.
Yeah.
Yeah, it looks like I got it yesterday. But here's the other thing I want to talk about. Overseas. Overseas is going too, right? So here's the German 30.
These are all dailies, right?
Here's the
Yep.
France 30, right? There's Spain 30, right? They're all
So you're
coming
getting
down.
that global confirmation.
Right. So how do you play it? I think easy. This is it. I like the long end, short TLT. Could use
Wow.
TLT puts. I'll be looking at them today. Some options.
What's the line in the sand? Is that 90, 91, 92?
Listen, you got to be short below, call it 92.50. And then where do we go? I would measure it, right? This is one that you measure, right, Pat?
Yeah.
So 92 to 108, that's 16 points. Measure that down. That gets you to about what, 72, 76?
Oof,
92 to 76.
man.
Look,
A lot of people were trying to buy that support level too last week.
TLT. So this is the iShares long-term treasury bond ETF. Lowest level since 2011. That's 12 years.
I mean, just
if this,
erase the past decade
Pat, if this
of progress.
based on the measured move that I just mentioned in the 70s, all-time lows. This fund's been around for years. So yeah, and you make a great point, right? Bonds were in a bull market for like our entire lifetime and then some, like 40 years. And
Oh yeah,
a couple years in 2-3 years time, that's just been blown to smithereens. All those gains.
wow.
Gone. So yeah, pretty crazy. Here's the 7 to 10 year, right? Same thing. You see straight line higher forever. And then that changed in 2020. Fed starts hiking rates. Bonds have really just fallen off the cliff. They've been good shorts already. I think they'll continue to be good shorts. I think rates are ready to go a lot higher than the market is prepared for. Give me your setup now. I've talked enough.
Ooh, I got SMFG. It is the second largest Japanese bank. We covered a trade idea on it in the Buzz this week, and yeah, I mean it's even up today, which is quite surprising given everything else is under pressure.
Pretty chart. What's your level here?
So the level's 1050. It's above 1050, and it hasn't quite triggered yet. Came awfully close today. I think it came within 10 cents. But Joe, by the way, Joe's laughing at your smithereens comment. That was pretty good. So yeah, above 1050, I think it's good. And that's a pretty massive base you got there. You know, that resistance dates back to call it 2013-ish. So you're looking at a decade base if it completes. And look at that gap higher recently. You know, you were talking about breakaway gaps, and that is a breakaway gap in a way because it gapped above the highs from I think that's 2017 highs or 2018 highs. Yes, 2018 highs.
This looks like a perfect like Wyckoff pattern, like we were talking about yesterday.
There you go.
Right? They call this something when it overshoots to the downside. They call that something, and so
Well, what do we call it?
that's failed breakdown.
There you go.
That's a shakeout, right?
That's a shake and bake. Yeah.
It's a shake. Hey, I love this. So if we're above 1050, Pat's looking for upside. What are you just going to measure that out? So tack $5 on 15.
You know what? I'm going for those highs right there. The I think that's 2008 highs. So it's around 17.
Pre-financial highs.
Yeah, and I know that's a lot of upside. I know that's a huge target, but I think sometimes it pays to think out of the outside of the box on these, especially when it's coming out of a massive base like that. We'll see. You know, it has to complete. Hasn't gotten the breakout yet, but I mean, hey, this thing's up today, and
who knew?
You know, the rest of the day, almost every other stock we've looked at has been forming some sort of distributive pattern, or at least weak.
Do I look at too many charts or what?
What the heck? What do you got? Wait. Can I guess what you got?
Are these the same thing? This thing looks exactly like UBS. I've been salivating at this monster base in UBS all year now. It's resolved. It's going. It's on its way.
Look at that. It looks very similar.
This looks just like it. Right? So
and you know what?
That's the UBS chart.
Wait. And that thing's been showing relative strength for a financial, for a bank, right?
Look at this UBS chart going. So this is what you're saying that this SMFG is gonna look like.
Oh, Steve, that's a really good point.
Why not? right? So this thing's going to go. Pattern looks almost identical. One bank is based in Japan. The other bank is based in Switzerland. I don't know what to tell you, right? See these patterns repeat all the time and mimic one another. So I like it, Pat. Monster base. Good work.
Good stuff, and great find with the UBS there. That's a really good point. Caesar, we can't get to Akamai, AKAM. Steve, you want to pull it up real quick, but then we really gotta wrap it now. We're running over.
The scheduling, we're gonna get yelled at. We're
Yeah.
Akamai.
We're just having too much fun. This show's great. You get to look at tons and kind of talk it out.
Guys, is this the airbag company? Is this the airbag
No,
company?
Akamai's tech, I think.
I know.
Akamai's been around forever.
It might. All right. Okay. Not the airbag company. Cloud. Yeah, I know it was tech. All right. Whatever.
It's cloud.
Big base. It says cloud. Big base. I like the ones that already broke out above their .com bubble highs. Just showing you Oracle as an example, right? .com bubble highs got the base breakout already going. Akamai still trapped below those .com bubble highs. So from a super long term or secular leader perspective, there are better charts out there, especially in the tech space. But really, you get a nice little confluence of interest here at the 38% retracement because it's also the pivot highs. So I think it's as simple as that. If you want to be long, buy it on strength above those pivot highs. 120, you get confirmation at the fib around 127. Better stuff out there, though.
There you have it. We really got to wrap it up now, but this is always so much fun. If you guys, if we didn't get to your tickers, be sure to email us at questions@stockmarketmedia.com and we'll try to get to them, or JC will get to them on Tuesday.
Yep. So thanks everybody for joining. That is our latest episode of Chart Request Live. Be sure to join us tomorrow morning, 8:30 sharp for the morning show. All right.
Who's your guest?
I have no idea.
All
right. Bye.
I'm sure it'll be good. Cheers. Thanks, guys.